Hi, and welcome to the Stockscores Market Minutes for October 12th, 2015. This week we're going to talk about the hardest skill in trading. The mechanics of trading are relatively easy to learn. Reading charts, executing orders, doing the analysis, those are all logic-based things that are relatively easy to do. Even developing good strategies, although it can be time-consuming, really anyone that has the determination to stick with it can figure out some good strategies. Or if nothing else, you can buy strategies from someone who has developed them and is willing to teach them to you. The most challenging skill to develop in trading is overcoming fear. And we can talk about lots of different kinds of fear. I would say the two primary fears are the fear of losing money and the fear of missing out on an opportunity. And the first one is why we usually don't sell our losers, and the second one, the fear of missing out, is why we end up taking marginal trades that really we should never take in the first place. Fear is irrational. You know, if you're standing at the top of a diving board at a swimming pool and you do your quick calculation, say, okay, I'm 10 feet above the water and the water's 20 feet deep. If I jump off this diving board, I will survive, right? If, however, you are standing on a 20-foot diving board and standing over a bucket of 6 inches of water, you do the rational calculation, you'll know that if you jump off that diving board, you're probably going to break your legs. So that's the difference, is the person who is unwilling to jump off the diving board into 20 feet of water is being irrational, because it's really no reason not to. They're just succumbing to their fear. But the reckless person would jump off the 20-foot diving board into a bucket of water. They're not listening to their fear, and they're being reckless because they're going to get hurt. And it's really no different in trading. If you do your analysis and your analysis says the expected value of taking this trade is positive, therefore you should take it. In other words, the probability of being right outweighs the potential loss of being wrong, then that's a trade that should be made based on the facts. So if you judge trades based on facts and you don't succumb to your fear, you're being an effective trader. It doesn't mean you're going to make money every time, because there is uncertainty in trading. But if you have a good strategy and you don't succumb to your fear, then you should do well. And that's, I think, the hardest thing to overcome in trading. It takes a little bit of time to develop the mechanics. It takes a little bit of time to develop the strategies, but it can take a very, very long time to get over fear. And I want everyone to just realize that that is the most difficult thing, the most important thing to do. And if you're having trouble with it, focus in on the facts. Don't listen to your emotions. All right, let's do our analysis for this week. S&P 500, good run this week. Rallied up to resistance on the intraday chart here. This was the highs of middle of September there. I think it was the 17th of September. And so I expect we're going to stall this short-term run. We've had a real big move up in the last 5 or 6 days. And so look for the market to probably get stuck early part of this week. It could roll over and go down again. And that's an important thing to watch for, because what we have on the long-term chart, and this is the weekly chart, is you see there in August the break of the long-term upward trend. We've bounced back this week. This is a weekly chart. So this one green candle over on the right-hand side here is just what happened last week. Now the question is, do we pop up to this red line and then start to roll over and move down again? Because if that happens, the market will have established a falling top, which sets us up for more weakness. Now, if instead the market continues to rally, and sure, it could pause at the 205 level for a couple of weeks, but ultimately it moves back to the highs of July, then we don't have a falling top. And so what we want to watch for in the next few weeks is whether the market can move back to the old highs, or if it creates a falling top. If it creates a falling top, then we're going to have to be real defensive and trade with the expectation that we're going into a longer-term downward trend. Russell 2000 also rallied back nicely this last week. It is now at the downward trend line where it's going to face some resistance. I expect, again, early next week we'll see that stall of strength. Doesn't mean that the strength is over, but at a minimum it should stall and maybe go sideways, maybe come down a little bit. And that'll be the key thing to watch for. So this week was a real good rally week. I don't think that's going to happen into next week. Could, certainly, but probability is that it won't. TSX really did better than the other markets in North America, largely because of the bounce back in oil. We saw so many oil stocks make big jumps this last week on their bounce back from oversold conditions. The charts of those oil stocks are far from good. I mean, as a swing trader, as a day trader, I had fun trading those things. But as a position trader with a long-term view, I still don't really believe that it is time to buy stocks and put them away for the next 3 years. It's not that kind of a chart yet. That could happen, but at this point it's still a trader's bounce and not an investor's signal to buy them for the long term. That, as I said, that may develop over the weeks ahead, but for now I still want you to be cautious longer term with the oil stocks. They're still fighting a lot of long-term pessimism. And that's really the case with the TSX. It had a good rally this week, broke through some resistance, but in the big picture, and this is the weekly chart, it's at that long-term downward trend line where it should, and I say should because that's what will probably happen, get stuck. Now, we only trade probability. I would say there's a 70% chance the market stops going up next week and at least stalls for a few days. There's a 30% chance it can bust right through that downward trend line and just keep rocketing higher. Not likely to happen, but possible. Here is the TSX Venture. It came back a little bit this week. It has at least formed a rising bottom. It's broken the steepest of the downward trends. It still has lots of resistance to work through, still well below the long-term downward trend line. So it's starting this, the early stages of a turnaround, but it did that in March of last year, in April of last year. It even did it at the end of August this year. So, a lot of these rallies have basically been sucker rallies where they didn't materialize into a true trend reversal. I think it's going to take some time for that to build, but we're taking a step in the right direction on those speculative Canadian stocks. Treasuries came down a little bit this week, which means interest rates went up a little bit this week. Not a big move, so I don't think it's all that important. Essentially here we're seeing the bond market struggling with, will the Fed raise rates or not? And will people want to buy U.S. bonds and send interest rates lower or not? Sorry, I said that the Treasury bond went down this week. That means interest rates went up. I'm not sure if I said it the right way or not, but anyway, that's how it works. If this ETF, TLT, goes up, that means interest rates are going down. All right, so it's actually broken the downward trend, and it looks like Treasuries want to go higher. I wouldn't say convincingly so in the chart, but that's sort of what's shaping up, which means that the expectation is that interest rates will go lower. Again, hardly a strong chart to point toward that result, but we'll see what happens there. I think you still don't bet on rates up or down. It's too tough to call at this point. The U.S. dollar was down this week, and that gave some support to oil, gave some support to gold. I don't know if oil going up made the U.S. dollar go down, or if the U.S. dollar going down made oil go up. They tend to be inversely correlated, and certainly this week that was the case. The U.S. dollar had been in kind of a flag pattern. It's now starting to look like a descending triangle after a strong upward trend. So until it breaks out of this pattern, I don't really have a particular expectation for where this is going to go, but we want to keep an eye on this pattern because it is getting to the pointy end of the triangle. Gold still in the downward trend, up the last few trading sessions, now at the downward trend line. It still has work to do, but certainly it could reverse if if the U.S. dollar were to continue to weaken. That might help gold break up, but I'm not a big believer in gold, and until the chart reverses, I would generally only consider it as a trade, not as a long-term, something that's going to move higher in the long term. Oil, I think, is the most important chart of the week because it broke up from a rising bottom. That is a good sign that oil is starting to turn. Now, this chart is a daily chart. If you look at the weekly chart, it's still got some problems. But based on what I see here, I think there's a very good chance that oil has bottomed. Back in August, when we had that first little rally, I felt like that was the most aggressive call that oil had made its bottom. And now we're getting a less aggressive, more probable call that oil has made its bottom. And so I do think you can start to pick at these stocks, but take it slowly because when long-term trends are in place, it takes time for them to reverse. So we're seeing the early stages of a turnaround. That means you can start to own some oil stocks, but don't jump into it wholeheartedly just yet. Pick away at them. I actually bought and sold some oil stocks over the last couple of weeks, made good profits on the bounce. I'm looking to buy back into them on a pullback. And finally, the VIX, which is moving down this past week as fear comes out of the market. That VIX will move lower, and it's still pretty high. So market is still concerned about the potential for a pullback, and we see that in that weekly chart of the S&P, it could make a falling top, roll over, and continue into a downward trend, continue its correction. So earnings are going to be important. Earnings started to roll out last week, and we'll see how that progresses. I think that's going to be the market's focus. So I've raised my rating on U.S. stocks to neutral on both time frames. The short-term rally, I think, will get stuck this week, and the question is, are we going to move to new highs or not? So I've put a neutral rating on both time frames. Canadian stocks, bearish long-term, neutral short-term. Gold, bearish long-term, neutral short-term. Oil, neutral long-term. I've upped my rating there, and bullish short-term. We've had a nice little rally. Again, wouldn't surprise me if you get a couple pullback days, but I do like how oil is shaping up, and I think traders can probably get some action out of there. But I personally am waiting for the pullback in the oil stocks after the big run that they had this week. Oil is improving, which helped many really beat up stocks rebound this week, and that was supportive for the TSX in particular. It will take time to reverse the long-term downward trend, so still treat these as a trade. Stocks have bounced back, but still at risk for forming a long-term falling top. Trade stock specific, in other words, focus in on some of the earnings names, take a short-term view right now. Stocks are better, but they're still on shaky ground. Well, that has been the Stockscores Market Minutes for October 12, 2015. Have a great week in the market and trade well.